Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Disney released restated earnings from 2021 through today last week, and I thought it would be helpful to go through exactly what they announced, what we learned about ESPN, because that's really what they broke out, was the sports business, and then some takeaways from particularly the linear business as well, because these are the kind of assets like ABC, the Disney Channel, that Disney might ultimately end up selling. So we're getting some information about linear side of the business, which might be up for sale, and then also the ESPN, the sports side of the business, which is now looking for partners. So that's what I'm going to dig through today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. And I'm going to go straight to the filing. This was filed with the SEC. So this is the direct source that I'm going to. And this is where I'm going to start. This is the summary of segment reporting changes. So this is basically what is changing from the old reports to these new reports. And this is what the company is going to be reporting going forward. So I'm going to start here on the revenue side. This is the top section. And the first section is called as originally reported. So this is what investors got 2021 through the last quarter. And this part that I'm looking at right here is just the 9 months ended July 1st, 2023. I'll go to the other segments in just a little bit. But you can see that the changes, and this is through the reorganization of the media and entertainment segment, is $11.5 billion from the first 9 months of this fiscal year is being pulled out of linear networks, $1.5 billion from direct to consumer. This would be ESPN Plus, the streaming network. And that is being put into this new sports segment. So $13.0 billion of revenue for the first 9 months of this fiscal year. On the operating income side, what we're seeing is $1.66 billion of operating profit being pulled out of linear networks and being put into this sports segment. They've also added these eliminations. This is basically when you have a big company and there are pieces of the company that are paying each other. Sometimes you need to eliminate some of those so you're not double counting revenue or profits. So that's what those eliminations are. Now I'm going to go back to 2021. This was the first year that was recast. And you can see that we're pulling out $14.6 billion in revenue from linear networks, $1.3 billion from direct to consumer. And in total, you get an operating profit of $2.7 billion for 2021. $15.9 billion in revenue, $2.7 billion in profit. So what we're looking for in the sports business and the linear network, which I'll get to in a second, is what the trends are. If we go up to 2022, you can see that revenue actually increased to $17.1 billion and operating income was up slightly to $2.7 billion. So we've heard a lot about the decline in linear TV, but specifically, we're not seeing that much of a decline. I'll get to where they're generating this revenue a little bit lower, but as they're looking for partners for ESPN, I think it's interesting to see how profitable the business is, $2.7 billion in operating income. We're probably not going to see quite that same number this fiscal year, but still a very strong profitability for ESPN. Now let's focus on the linear side of the business. So this is the more legacy channels, and we're going to see the linear network segment actually had more than half of its revenue pulled from ESPN. So less than half of the revenue from the linear segment is coming from non-ESPN channels. Now, as it's recast, $13.5 billion worth of revenue from the linear networks and operating profit $5.3 billion. This is for fiscal 2021. If we go up to fiscal 2022, you can see that revenue now falls to $12.8 billion. Operating income falls slightly to $5.2 billion. So this is where you're seeing this business really be in decline. If we go back up to now, this is the current fiscal year. So this is the first 3 quarters of the fiscal year. Revenue is declining even further. We're on a run rate of about $3 billion per quarter. $9.1 billion so far this fiscal year, and operating profit was just $3.3 billion. So this is where the business is really deteriorating, is in the non-ESPN linear networks. I think that was the big takeaway from them reporting these segments and actually pulling out ESPN. ESPN is actually doing pretty well. This is another way to look at the fiscal 2023 results. This is the 9 months ended results right here. You can see that sports had $13.2 billion in revenue. Entertainment and experiences were both significantly higher than that, but entertainment's operating profit was actually lower. And this is despite a really bad first fiscal quarter. So on a run rate basis, you're looking at more like $3 to $3.5 billion of operating income from this sports segment. So still a very profitable segment, but the money is really coming from experiences for ESPN. I will also note that the entertainment segment right here is including the operating losses from direct to consumer. And that's what we can go through right here on the entertainment side. Again, we're looking at how much value do these linear networks still have? Because it seems like Disney is definitely going to keep the streaming businesses, Disney Plus, Hulu, ESPN Plus, even. They're not going to sell off those businesses. They want that to be the future. So if they're going to sell anything, they're probably going to sell some of the linear networks. Still pretty profitable, $3.3 billion worth of operating income in the last 9 months. And that money is primarily coming from affiliate fees. That's what you see down here is the linear network breakdown of where does the revenue come from. $5.6 billion in revenue from affiliate fees, $3.3 billion from advertising. So if you were an investor and looking to acquire these channels, there is a pretty good business here. There's a lot of cash flow coming from the linear network business. If you wanted to acquire these businesses, cut costs even more, and just kind of milk them for everything that they're worth, I think that's what may end up happening with channels like ABC, Disney Network, National Geographic, some of the other channels that ESPN has on the cable bundle. The one thing that I'll note here is on the affiliate fee side, what we saw with the most recent negotiations with Charter is that some of these channels are actually being eliminated from the traditional cable bundle. So the power of ESPN was always that you could charge a high price for ESPN, but then Disney could also say, well, you also need to include all these other channels. And so those affiliate fees added up. We may see some of those affiliate fees from those adjacent channels start to come down as they're not included in more and more of these negotiations where ESPN is really the centerpiece. So something to think about with those affiliate fees and advertising revenue in the future. On the sports side, we also got a breakdown of where revenue comes from for ESPN, 2.6 in the first 9 months of this year, $8.1 billion worth of revenue from affiliate fees, advertising $3.2 billion. So think about that. They're generating less than half of their revenue of affiliate fees from advertising. So that's why these affiliate fees are so important to ESPN. Subscription fees, this would be for ESPN Plus, $1.1 billion. Operating income, $1.5 billion so far. But like I said, that first fiscal quarter was pretty low. So there are a number of reasons we want to understand how ESPN and the linear networks fit into Disney's business. What Bob Iger has talked about in the past is how they're going to strategically change how ESPN runs. I think the two cores of the business right now are going to be the experiences, that's the theme parks, cruises, things like that. And then also you have the streaming networks. That's going to be where content is both created and distributed to customers, Disney Plus and Hulu. That's going to be the distribution. Of course, they're going to also keep the studios. The question mark for the future is what happens to ESPN? Iger has said that they're looking for strategic partners. What exactly does that mean? We don't quite know, but I think the way that I'm thinking about this from a streaming perspective is if you want ESPN Plus to be the future of sports, you're going to have a lot of content in that bundle. You want to be basically the Netflix of sports, the place that you go to no matter what kind of game you want to watch. So is Disney going to be able to pay up for rights for things like the NBA? There's a lot of unknowns for the NHL and Major League Baseball with the bankruptcy of Diamond Sports, which had a lot of the regional networks. So they'd be able to pull a lot of that content together and create something of an entertainment hub. I think that would be the vision. But not only would that be very expensive, you may need partners who have some of those distribution rights to come along with you. So that's the way that I'm thinking about it, whether they're partnering like with a channel like TNT for NBA rights, or whether they're partnering directly with something like Major League Baseball or the NBA. Even the NFL has talked about potentially buying one of these networks, which I don't think will happen, but has definitely been discussed. The other thing is I wouldn't be surprised if we see some of these linear networks, which appear to be non-core. And the way to think about that is, and that would likely be just an outright sale to an investor and saying, you can monetize this a little bit better than we can. So sell some of those assets like ABC and some of the cable networks, get cash to pay down debt, invest more in the streaming content, things like that. And so this breakout of the business's financials really tells a lot about where the money is coming from, where it's going, how sports fits into this. And in the future, Disney is going to be releasing their results with this kind of structure. Look for this information to continue and for the trends to be something that we're going to watch in the future. What is the sports business doing? Is it growing? Is that operating profit remaining high? What does the profit look like for the linear networks? That's what I'm going to be looking for when results are released in November. But hopefully this was some helpful background for what was released last week from Disney. I think it gives a lot more color to the business and a lot more information that will probably be helpful as Disney makes a lot of strategic changes in the future. Thanks for watching, everybody. Don't forget to subscribe to Asymmetric Investing here on YouTube, and I'll see you here next time.